Good afternoon and welcome to the Shield Therapeutics PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received in the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Greg Madison, CEO. Good afternoon, sir.
Great, and thank you everybody for joining us today. We're very happy to discuss our 2022 financial results and first quarter 2023 update. Joining me in the call today is my Chief Financial Officer, Hans-Peter Rudolph, and we will be going through our presentation, and then we'll be responding to some questions that are submitted on the platform here at the end of the discussion. So let's kind of hop right into it, if you will. We will be making forward-looking statements, so please go back and review all of our financials and disclosures carefully as we go through the presentation. So look, we are really happy with where we're at as of right now. There's been a lot of work that's had to been done here, particularly in the first several months of 2023, and we're very pleased to kind of provide you with some updates here and some context on where things stand right now. But obviously, as we kind of close the final chapter in 2022, and we'll get to that in just a minute, and then shift our attention here to 2023. Some quick highlights that we're able to achieve, nice rapid growth in prescriptions last year, achieving over 25,000 prescriptions of Accrufer here in the US, which is up 12-fold year over year. Then we started the year in 23 with a strong 12% sequential increase in growth off of that Q4 platform. Very impressive, particularly when you think about some of the behind the scenes things going on here as we kind of expand our commercial operation and look to hire a whole bunch of people, which we've done a really nice job of. Speaking of that process here, we signed the Viatris agreement as a collaborative sales agreement at the end of December last year. We have made tremendous progress with that partnership overall. I'm going to be happy to talk about our goal that we had of getting to 100 people out there in the field by early May, and we're very much on track to achieve that goal. And obviously, the end of last year, we raised funds to support our operations to cash flow break even by the year end 2024. And down below, you see some of the milestones that we have line of sight that we are setting our eyes on for the next couple of years. So before we get into a lot of the forward-looking kind of 2023 performance, as noted earlier, I think this is our opportunity to kind of put final closure for 2022 with our updates we provided today. With that, Hans-Peter, let me turn it over to you for the next couple of slides to walk everybody through what we announced today related to 2022.
Yes, thank you, Greg, and good afternoon, everyone. In terms of financial highlights, I'd like to focus on three areas. First and foremost, revenues. We reported £4.5 million, about $5.4 million in total revenues for 2022. That is comprised of net product revenue from Accrufer sales of £2.9 million, royalty revenue from product sales in Europe by our partner Norgine of $1.4 million, and an upfront payment of £0.2 million from Kai Pharmaceuticals on the signing of the license agreement with this partner in Canada in the early part of 2022. Important that in this number, we have not included total revenue from the upfront payment received from Viatris upon execution of the co-promote arrangement. That payment of £4.2 million was received in December. However, unlike normal traditional license agreements, we needed to record that differently, and we effectively needed to align the recognition of that in line with the spend that we have to undertake to prepare the commercial operations for the co-promote partnership, which means in the 2022 income statement, you'll find £0.7 million in other income, which is a small portion of that upfront. The balance of £3.5 million will be recognized in 2023 when we actually will expend the related costs. Operating loss before impairment and research and development expenditures amounted to £24.6 million. That is roughly £5 million more than in the last year. That increase is primarily attributable to additional selling costs in the US, as we now had a full year of US commercial operations in 21 in comparison. As you recall, we only launched the product effective July, and as a result, we had only had a half year of effective selling activities. Cash and cash equivalents amounted to 2.8 million pounds at December 31, 2022. However, that amount does not yet include the net proceeds from the equity fundraise, which we collected in the very early part of January. That amounted to 16.2 million pounds, as well as the drawdown on the second tranche after the amendment of the shareholder loan, the convertible shareholder loan, which added another 8.2 million pounds and was also added in January of 23. At the end of March 31, 2023, we had cash on hand of just under 20 million pounds. Greg? Yes, and then here a recap. I think this is important that we can show you all that what we have effectively done and completed in terms of funding transactions over the last 6 to 8 months. It's been 4 separate transactions that have contributed to the cash balance that we have on hand right now. In August, very early August of 22, we executed the initial tranche of the convertible shareholder loan with AOP Health International Management that yielded net proceeds of 8 million pounds. Then in December, as previously mentioned, we collected the upfront payment from the Viatris co-promote partnership of 4.2 million pounds. And then in January, we follow through with the net proceeds from the equity placing and open offer, as well as the amendment, the second tranche of the convertible shareholder loan of 16.2 and 8.2 million pounds respectively. In total, over a 6 months period, we were able to raise additional funds in a very, very difficult environment of 36.6 million pounds or nearly $45 million. That results in the cash on hand balance that I just introduced before, just under 20 million pounds. And perhaps importantly as well, after a couple of conversions, of partial conversions of the shareholder loan by AOP, we have a debt balance of 12.4 million pounds as of the end of March. That's $15 million. And we only pay interest on about 1/3 of that for 23. As you may recall from the announcement that we made at the time when we signed the amendment to the loan agreement, the second tranche of 10 million is got an interest holiday for all of 2023. Thank you.
Thanks, Peter. Great. So let's go into what we are excited about here. And I think, honestly, as we think about where we are, not only ending 2022, but as we enter 2023, I think ourselves and our new partner, Viatris, we share the same viewpoint of where we can take this product overall. And that's one of the reasons both companies have come together. So we talked about this large defined market, what we believe that we have in an FDA-approved potential best-in-class solution. You will see over and over again, this unmet need is real out there. We've got the commercial partnership agreement that we'll talk about in detail. In addition, we've made some nice additions to our team here as a senior leadership team, but we've got a very, very experienced team here that knows how to launch brands and build drugs. And we've got a strong reimbursement base on which to be able to build here as well. One of the things that we share the common view at is this market being very, very ripe for what we call innovative disruption. So you've got this very large market of 20 million patients out there suffering from anemia. You've got 13 million prescriptions written every single year for OTC iron, creating a market opportunity of $2.3 billion. We know where these prescriptions are written. 80% are written by women's health and general practitioners, which is exactly where we've kind of concentrated our selling efforts. And you've got this incredibly unsatisfied market driven by GI-related adverse events and minimal efficacy. So over and over and over again, you will hear from physicians and patients alike that this tolerability, these GI-related adverse events comes front and center when they're treated with these OTC irons. And the challenge here is that there's been little to no innovation in the oral iron therapies in the past decade. So what this creates is a bit of a dormant market, right? This market has been operating the same way for the past 5 to 10 years, meaning that physicians see a patient with iron deficiency, with or without anemia, they write in OTC irons as first prescription. They don't expect it's going to work, but they'll hope it will work and be effective and be tolerated. But generally speaking, patients are going to cycle over and over again back to these therapies, and we need to wake this market up. This is a very, very dormant market. We believe we have a best-in-class type of solution, but if they don't know about it, they can't change their behavior, and that's collectively the work that all of us are out there trying to do. Importantly, from a basic standpoint, iron deficiency, it is actively treated by physicians. There is no question. This is not an issue where we need to educate them on the need to treat. It is very well established that iron deficiency and iron deficiency anemia is a source of morbidity and mortality. So when physicians see these patients, they do actively treat. On the right-hand side, the challenge I noted is you just get into this unsatisfactory cycle of switches and discontinuations from the patient perspective. It frustrates patients and it frustrates physicians, to be perfectly candid out there as well. We've developed our product to deliver both effectiveness and tolerability, right? We get a proprietary formulation with our maltol complex as compared to traditional oral irons, which are mostly these ferrous-based irons overall. What this allows us to do is, you see on the right-hand side, this maltol complex basically acts like a shield. So it enables the iron to pass through the stomach, get down to the duodenum where the iron is absorbed. We use a very low dose of iron because it's delivered directly to the site where the body is going to absorb that iron. That contrasts significantly what you see with ferrous-based irons, which dissociate as soon as it hits the stomach. And that free iron that's now circulating in the gut leads to a lot of those discontinuation rates and a lot of those GI-related adverse events. So, our molecule that we designed was very, very specific here. And when we get a chance to talk to physicians about this particular aspect of what their experience is like with traditional irons, what our product is like, what our MOA is like, how we designed it to be different, and then backing it up with our clinical trials as shown here, the reaction is quite positive. But the challenge is we got to get out there to more physicians, which again is what we're going to talk about in just a minute. But our product is very elegant, very simple overall in order to how we designed it. But the results of the trials, there were 3 phase 3 trials that showed across the board significant increases in hemoglobin to treat the iron deficiency, but doing it in a way that's well tolerated with a less than 5% adverse reaction and discontinuation rate. So for us at Shield, we've got a great leadership team here and a great commercial team that has highly experienced. I would draw attention to Andy Hurley, who's in the middle of that box here as well. We just hired Andy as our Chief Commercial Officer. We announced that just a couple of weeks ago. He is off to a very, very good start. Andy stands out here. He has extensive commercialization experience across a number of different roles throughout his career as he's built up his experience, both from a leadership perspective, but understands how to execute and drive drug launches. He is off to an excellent start. He's already done his first day in the field with one of our reps. He's down in Pittsburgh this week with the rest of the training class, get to know them as well. And I think he's going to be a great addition to our team here as well. So let's kind of move forward into 23 and talk about our partnership mission between us and Viatris. And obviously, I think our universal goal here is to make Accrufer the oral iron of choice in the US market. I think we have the opportunity to do that. As a reminder on some of the details of that agreement that we signed at the end of December last year, there was an upfront payment of $5 million on signing. The start date of this agreement was just a short 4 months ago. So January 1 was the official start of this overall agreement. This is a revenue and cost sharing model. We share net revenues and marketing costs, with Shield taking a slightly higher share. Collectively, the biggest focus here is building up that 100-person sales force. We'll talk about that in some detail. Each company pays for its own sales force, related selling costs. And then we have certainly sales milestones that are out there as well. One of the things that attracted us to Viatris, in addition to our universal view of the market and the potential here, is just the commercial depth and breadth that they bring to the table that we believe can help accelerate Accrufer and drive us to what we believe this can get to across the board. So they've got a well-established commercial infrastructure and relationships. They are, just like us, hiring a dedicated 50-person sales team that's promoting only Accrufer. They bring to the table best-in-class digital marketing as well as direct-to-patient capabilities. You're already going to see that the marketing teams, while we've been focused on expanding the field force right now, the marketing teams are already off and running. We're launching a brand new brand campaign here next month. So those teams have already been working very hard and have produced some really, really nice things that we're going to be able to talk about. And then last but certainly not least is they've got a very large experienced market access team with extensive relationships. We think there's significant opportunity here, especially in the back half of this year as we continue to drive that forward. So one of the things that we have been communicating throughout last year is how do we drive and accelerate Accrufer growth, right? And there are 3 key areas we're going to talk about. One is the field force expansion. The The second was amplifying up our digital strategy, our marketing initiatives. And the third was expanding our market access and distribution. In many ways, our partnership with Viatris checks a lot of these boxes, which is why we executed that as well. But let's give you a little bit more detail on just where we stand right now. So first and foremost, the field force expansion, right? So on the left-hand side here, you saw where Shield had launched initially with our contract sales force and the coverage we had from a geographic perspective. This new 100-person combined sales force, you see on the right-hand side, it's very obvious we get a lot more reach and a lot more efficiency out of this, right? So of the 100 people that we have out there, they're going to collectively be calling on over 12,000 high prescribing healthcare professionals. So not only are we covering a lot more geography and reaching a lot more physicians, the sales team's territories are much, much smaller, which drives that efficiency, right? One of the things you'll hear me say a lot is this is a very promotionally sensitive product, right? The more physicians hear about it, the more often they hear about it, the different ways that they hear about it drives that adoption on a faster perspective. So obviously we're going to have a much bigger reach and efficiency and frequency from our expanded field force with their targeted physicians, which is a huge bonus. I'm going to spend a couple of minutes on this slide. I think this is critically important here. So as we kicked off the new year, the sales force expansion, growing the team to 100 collectively, 50 from Shield, 50 from Viatris, that is in many ways was priority A, B, and C, right? This had to happen. And we wanted to make sure that we had a line of sight. We communicated that our goal collectively was to have all those people out in the field, speaking to physicians and trained by May. And I'm pleased to say we're very much on track to achieve that goal. In many ways, this can be incredibly disruptive to a lot of organizations, right? You know, you think about, we're going to go through where we were in December. We had to basically tear up all those territory maps, all new territories. Then you got to get out there and recruit, hire, and train a whole bunch of people in a very, very short period of time, right? And meanwhile, you got to keep growing your business, right? And for us at Shield, we're not a huge team. We're a very lean team overall. So the same people that are out there trying to coach our reps are the same people that have to undertake, this entire operation. And I couldn't be more pleased with where we ended up overall. So let's go through this in a little bit of detail. As a reminder, in the fourth quarter of 2022, for Shield, we had an average of 25 contract sales reps out in the field talking to physicians. So the first thing we did is once we announced the deal, we took a look at those 25 contract sales reps. We interviewed each and every one of them. We hired 16 of that 25, right? And those were now direct Shield employees, right? So we've moved away from the contract sales model. These are now direct Shield employees. So we had 16 reps promoting Aquifer in the field during the month of January. That is the lowest number of reps we had in any month since launch, right? So we hired the right people there. At the end of January, we then trained the first 14 Viatris reps, right? So got them trained. They went out in the field February 1st. So as we get into the month of February, we now had the 16 Shield reps, the 14 Viatris reps. So in essence, 30 reps collectively promoting to their physicians for the month of February and March. April 1st, we had the next wave that were trained that came through. That number collectively jumped from 30 to 66 combined. And then in May, we have a training class that's going on as we speak. In May, that number will jump from 66 to 98. So still 2 vacant territories to finish off, but we'll have 98 sales reps out in the field collectively between the two organizations in May. We are both coming together for a national sales meeting, in the first week of May to kind of get that last level of training up and running. So by mid-May, you will have the 98 out there in the field promoting to their doctors as well. So very, very impressive to have this level of recruitment, hiring, and training to be done in a very short period of time. And again, with a very lean team that's been doing a lot of work behind the scenes here as well. What I'm also pleased to see is it's one thing to hit the number, so there's we could hire, a average person, if you will, to kind of achieve the goal of the number, but we haven't hired what we believe are the average type of people. We've got a very highly credentialed team. So from the Shield perspective, as we looked at, we had 34 vacancies. We had over 4,000 candidates looking at those vacancies overall, right? So, from 4,000, we hired 34. What that allowed us to do is be very selective and identify people that not only brought good, strong experience in the pharmaceutical selling model, but also women's health experience, which is an area that As you've heard me say, we've seen really good uptake right now for Accrufer. Half of our prescriptions come out of women's health. So on average, those new waves of reps that have come in bring over 8 years of average sales experience and 4 years of average women's health experience, all of which we think can help continue to accelerate that as well. I will say, as the reps come on board here, from an industry average perspective, it takes on average 3 to 5 months for a brand new rep, and no matter what the disease state, what the territory, 3 to 5 months to kind of get up to a productive level across the board. Obviously collectively, we want to try to accelerate that. We'd rather be on the more the 3-month side versus the 5-month side overall, but on average, that's how it kind of plays out. So again, very, very good work, both in the Shield side, but also with our partners, and couldn't be more pleased to have the reps on board as well. So while I noted earlier that that type of work that we just went through can be incredibly disruptive to an organization, right? Particularly on the both sides, but on the Shield side, I know how many people I have on my commercial team, and the same people that are driving the business are the same ones that had to pivot as an organization and focus in that first quarter of getting that expansion done. What we're pleased to see is that despite all that, we had an increase of 12% prescriptions in the first quarter as compared to that fourth quarter 2022. We also saw continuing that 50% of our business is coming out of the women's health segment, another 43% out of the GPs, and collectively with that 100-person sales force, that's where they're focused. Women's health and general practitioners, that's what their target list is built off of. So I think we're calling in the right areas to be able to hit that. So importantly, and we won't do this on a regular basis, but I think in this particular circumstance, it warranted diving a little bit deeper into that 12% sequential growth, right? So if you think about now the overlay of timing of reps coming on board and training and what they kind of look like, and then starting to think about that from a broader perspective overall, we wanted to highlight kind of month over month growth. And what we started to see here is in the March timeframe, significant upticks in a couple of the key performance indicators that we want to look at, right? So for example, you'd see on the arrows here, 21% growth in the month of March on total prescriptions overall. In fact, 38% of the total prescriptions for the first quarter came out of that March timeframe overall. A couple other key performance indicators, one of which I think is probably really important, as we look at the lower right-hand box, first-time prescribers, you saw a 24% increase in the first quarter, but you can look at the sequence here, right? Down 9% in January, up 41% in February, and then up another 71% in March. Same thing on the new prescription side, right? So, what we're seeing is as that, kind of newly trained team gets out there and starts getting out in the field, we're starting to see little indicators of what this might be able to look like. And it matches exactly what we wanted to see, which is, hey, as we get a larger team out there, drive that awareness, get in front of more physicians, we should be seeing, increases on the first-time prescribers and other metrics as well. So it's early, I would kind of, we're not declaring victory by any stretch of the imagination, but I think it's a really good sign for what we'll be able to see across the board. And we're really proud of the accomplishments across the board on the team. The second piece to kind of layer into that the team behind the scenes have been hard at work at, is the second initiative around amplifying the digital strategy and the marketing initiatives. I will tell you from experience, redoing an entire brand campaign and getting a new collateral out there, et cetera, that is a very big undertaking. The teams jumped in together very, very quickly here, matching the brain power and the expertise we bring from the Shield side, in the Viatris side, in the resources behind each organization to be able to do this. So we've got a brand new brand campaign that's launching next month. The setup here, as we talked about earlier, is that the unmet needs of these patients are absolutely real, right? So we've talked about 70% of patients reporting GI issues, a lot of discontinuation rates. So the real concept here that we kind of crystallize this, or the teams crystallize, is patients are sick, they're trying to get treatment for the iron deficiency anemia, and in fact, the treatment they're getting to treat this is making them feel worse, right? So this whole new brand campaign is built on the irony of that effect, right? So interesting that the irony, it's a very interesting twist on the word iron here as well. This is edgy, it's designed to kind of wake up and stand out in that dormant market we talked about. But look, life is full of irony and the patients don't need it in their iron, right? So rather than giving them a product that potentially will make them feel worse, we think we've got a product in Accrufer that can give both effectiveness, but tolerability as well. So we've got a number of different things that the teams have worked on here on disruptive tactics. So from a personal promotion All the representatives in the field are going to have brand new materials out there to get in front of their physicians with, from the print side, the digital side, et cetera. So that team is getting trained at this time point at the May national meeting. In addition to that, a bunch of the tactics on the non-promotional side, brand new patient and HCP websites, marketing automation to help expand that broad reach, targeted media tactics, and then certainly not last but not least is patient and social activation as well. So a very much kind of an omni-channel type of approach where in addition to that field force expansion, coming right behind them is that air cover, right? In a number of different ways. And we've never had that before. So we're thrilled about the ability of those teams to kind of work together on this. And then really I don't want to call it the coup de grace, but the last piece of this as well is that the largest women's healthcare conference here in the US, the American College of Obstetrics and Gynecology, is taking place in the second weekend of May in Baltimore. There's over 4,000 women's healthcare professionals in attendance there as well. And we're launching this new campaign there as well with a really creative and innovative booth that is going to have tremendous stopping power and memory on this is a booth you can visit, the irony behind that. So again, the goal here is disrupt the current thinking, get that stopping power, have them pause and reflect on what they're doing in the past and how it's really not been working, and get them to introduce to Aquifer as well. So a lot of nice pieces of the puzzle really starting to come together. The last piece that we talked about is really how do we expand our market access and distribution. And right now we're standing at that 100 million covered lives, 40% of the total lives that are eligible to have coverage for Aquifer. We've got that as well. We've spent a lot of time working collaboratively with the Viatris market access team. Their level of engagement is extremely high. We've been doing a lot of data analysis, looking at areas of opportunity. And I think this is beginning of the second half of 22. Now that we can turn our time and attention that the sales team is done, the marketing team is done. This is the next one on the list. And really it comes into two different areas. One is how do we take better advantage of the access that we currently have? How do we drive that through, particularly with now the 100 people out there we're going to have in the field in mid-May? The second piece is where are areas of opportunity that we do not have coverage? Where are PBMs that maybe we don't have access to? Now, a lot of that does get driven by volume, right? So these two go hand in hand, right? You're going to have your 98 or 100 sales reps out there in May driving that larger volume. That's going to create opportunities for us to work on together. So very optimistic of what we're going to be able to do there as well. And there's certainly this, kind of full, what I call commercial deployment, if you will, across the board. It's sales, it's marketing, it's access, drives this potential for Aquifer adoption, right? So you can see our targets here from a market share perspective for the next couple of years across the board. Certainly reasonable market shares to attain, but again, we've got to kind of get out there, wake this market up. And I think the performance that we saw in the early part of Q1, you start to think about having the full sales force out there, calling their physicians, marketing support behind it, the potential for market access expansion. I think it drives a lot of optimism here, both internally at us as well as our partners as well. We spend a minute on the international opportunity. All of our partnerships continue to progress. We've got 4 different areas to kind of touch base on here. The one area that we have that is commercial right now is Norgine in Europe. And then we got 3 kind of development or development stage areas, Kai being the most up to date, the closest for approval, and then Korea and China. On the Norgine perspective, they increased their sales volume in 2022 by 6.5%. We're still working with Norgine. We're certainly not satisfied by any stretch by that level of performance, and we think we can do better. We continue to work with them on focusing their attention to the right call points in the right markets, right? Particularly Germany and the UK. I'd say Germany is doing probably a better job than the UK is at this point in time. We're going to continue to work with them to drive that because we believe there's a lot more upside here. This is not a product potential opportunity. We believe there's just some execution pieces that we can potentially do a little bit better here. On the Kai Pharmaceutical side, and Canada's noted, they submitted their regulatory package last year. That timeline for potential approval is expected the middle part of this year. That gives us a small milestone payment. And obviously on the back end, once they launch, tiered royalties on net sales. Republic of Korea is in process right now of enrolling their PK study. That is the one study that they need to submit for regulatory approval. We expect that study should be complete by the end of 2023. And they'll apply for approval early part of next year. And then last but not least, China. China's continuing enrollment with the phase 3 study. This study definitely was impacted the last 12 to 18 months due to COVID in China. In some ways, while the rest of the world had kind of moved past the COVID piece, COVID obviously impacted China quite a bit during the latter part of 2022 and continue to be an impact. So we're working very closely with them to kind of figure out, all right, how do we get this study kind of back on track? But right now that study is probably out in the 2025 timeframe. There is an important milestone payment for us upon approval there, and obviously we want to work very close with them, and the communication is strong across the board. Great, Hans-Peter, anything to highlight here?
Just very quickly here, obviously, we already highlighted the cash balance as of the end of March, 19.2 million pounds. That's corresponding to $23 million. US Aquifer revenue of 2.9 million pounds, royalty milestone revenues of 1.6 million pounds, plus the upfront we collected from Viatris, our co-promo partner, of 4.2 million pounds, whereas most of that will be recognized in 2023. At the bottom, you see our current market capitalization as well as our total number of shares outstanding, which is 586 million approximately. And just to keep everybody's mind, we're obviously listed on the London Stock Exchange, the AIM market, under the ticker symbol STX, but we're also cross-traded at the OTCQX market in the US, in New York, under the ticker symbol SHIEF.
Very good, thank you. All right, so upcoming milestones to kind of keep an eye on here. Obviously in the US, we're going to continue. We've got the field force fully trained and deployed. Mid-May, they'll be out there ready to go. We get the commercial booth at ACOG, and we've got a goal for prescriptions. We'll continue to keep the market updated on where we stand as well. On the ex-US side, talked about Kai Pharmaceuticals we're at. Korea Pharma on track to kind of get their study done by the end of the year, and then we're continuing to enroll in our pediatric study as well. I'd say that's still probably a couple of years away from actually potential approval timeframe. However, that gives potentially another opportunity for another important market segment here to expand and grow from as well. And then last but not least, on an ongoing communication perspective, we'll have our AGM in June. Half-year trading update will be probably around the August timeframe, and half-year financial results in the September timeframe as well. So in summary, we're very pleased with not only what we're able to accomplish as we kind of closed a chapter in 2022, but 23 is off to a great start, right? Got a very focused, dedicated team here. The amount of work that had to be done here to kind of get this thing up and running, and particularly on the Salesforce side, was incredible. And the team did an excellent job there. And I think we are very, very optimistic of what this could look like. Last but not least, I would say the level of communication and collaboration with our partners at Viatris far, far, far exceeds my expectations. It is a phenomenal group of people. And what I'm really pleased about as well is that the level of engagement between the two field sales forces as they get out there, whether it be the managers, the reps, there's just wide open communication around sharing of experience, what's working, what's not working. We're very much managing this in some ways as almost one kind of unified organization, which is what we envisioned, but that's really hard to accomplish in a lot of these types of deals. But we're doing a really, really nice job here. So couldn't be more pleased. And we think this portends to a very, very, be a very fun and interesting second half of the year. I think we're very optimistic of where we go here. All right, so with that, give us just a brief moment and we can kind of look through some of these questions, and we'll start to, between Hans-Peter and myself, start to answer some of these questions that are coming through. Just bear with us for just a minute. There are quite a number of questions here. We're definitely not going to be able to get to all of these, but we'll do our best to try to hit the key themes.
Perfect. Greg, Hans-Peter, thank you very much for your presentation. What I'll do now is I'll just bring your cameras back up. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you've mentioned, we have received a number of questions throughout today's presentation. And Hans-Peter or Greg, if I could just ask you to read out those questions and give responses where it's appropriate to do so. I'll pick up from you both at the end.
Yeah, I think there's one here. So again, bear with us as we're trying to read through some of these and answer them as well as a lot. So we appreciate all the questions that come in. One that just popped in here. So there's a question on kind of Q1 sales. How many were, so reading this here, how many are prescriber driven versus a result of a salesperson interaction? And I think this is getting to maybe a push-pull type of question, if you will, right? How much is a push, from a Salesforce perspective versus, how many are being written without the level of a salesperson there? So it's a great question, and early on, it's very much a push, much more a push than a pull at this point in time, right? So as you think about the map that we put up there overall, and where we were as a Shield contract sales organization, where the new field organization is going to be, there are so many physicians across the U.S. that have never heard of the product Aquifer, right? Just by ways of this, we've never been able to get to them with either a field person or really a lot of the marketing materials. So right now, it is much more a push of driving awareness, introducing the Aquifer, getting those first-time prescribers, and really getting the office up and running, right? So you got the physician piece that you want to get to educate them and get to write the prescription. Then the staff does a lot of the work on the payer side to ensure prior authorizations are submitted, et cetera, et cetera. So there are two kind of levers here to kind of think about as we drive the push. Then how do you kind of then turn it into a more of a pull, right? And try to estimate any time point in that is always challenging. Usually you can see it in retrospect, but not at the point. But there are two maybe levers to think about here. What we have seen in the early experiences, once you get a physician that goes from a first-time prescriber to an adopter, right? Meaning that, hey, Aquifer is my first choice. I got the office staff up and running of how to handle whatever paperwork needs to get done as well. That once you get that moving, it does kind of run, I won't say by itself, but it allows the representative to spend less time at that office, right? So early on, from a frequency perspective, a rep would definitely want to spend time that they've got a first-time prescriber. There's an intensive kind of build-up to kind of get them up and running. Every physician moves differently in time, but there's an intensive build-up, a lot of frequency and follow-up, et cetera. Once you've got up and running, the rep can definitely kind of pull back and spend that same time somewhere else, right? So that's part of how they route their territories and how they design that as well. And they can just pull back. It doesn't mean they disappear, but their frequency can kind of drop down compared to where it was before. The other lever here is on that marketing side and the marketing campaign side. This is the importance of the digital piece, getting ourselves out at congresses like ACOG. We've never been to a congress like that before. So how do you continue to drive that awareness on multiple different tactics beyond just the representatives? And obviously that's going to get up and running here. So that'll provide a certain boost there for them as well. Not just support to the reps, doctors that they're calling on, but also beyond that 12,000. And I guess the last lever to think about here is that patient, right? How do you activate the patient? How do you get them, you're becoming aware of this type of product overall, potentially walking into a physician's office and asking for a prescription of Aquifer. So that usually kind of lags the physician approach a little bit here, but as you saw with the marketing campaign that we're launching, we definitely have that on the radar screen of how do we start to activate the patient, how do we get involved in the social media side in the appropriate way here as well to really think about activating that patient. So once you kind of you eventually will get to a certain tipping point where you'll always have some promotional effort from your reps, but you build momentum where it's less push and a lot more pull that you see coming in, and that's the beauty where we think we can get this as well. Right, so very good question there. Hans-Peter, any ones that you've picked up on?
Yeah, there was a number of finance-related questions, and maybe I'll pick up on those, give you a minute here to take a breather as well.
Sure.
There's several questions really that were related and asked about the cash burn in Q1 2023. And I just want to correct maybe a slight misunderstanding. Of the four elements that brought cash into the organization, two were already 2022 events, meaning that cash was actually collected in 22 and as such incorporated in the year-end cash balance of 2.8. We obviously used those, or a majority of those funds, to run operations in Q4 22. So what really was cash that came into the organization in Q1 was two elements. One, the 16.2 million net from the equity raise and open offer. And secondly, the draw of the second tranche after the amendment of the convertible shareholder loan. So if you report, or we report 2.8 million at 31 December 2022, add the 16.2, add the 8.2, we get to 27.2. and then subtract the end of March cash balance of 19.2, that leads to a cash burn, a net of 8 million pounds for the first quarter. Now, obviously, it's important to recognize that we don't expect that same net cash burn for each of the quarters in the remainder of the year. That would be unrealistic. But as we had to start building up this new reality with the new commercial operation and the co-promote partner, we had to pre-invest significantly. And that starts obviously investing in the recruitment process, training process, making sure the organization is ready. And that's just on the front end. On the back end, you need to invest into processes, systems, and also get a few other people in-house that can actually support a sales staff of roughly 50 without the sales management team. So quite a significant pre-investment that needed to be undertaken. And quite frankly, the 8 million net cash burn is not something that surprised us or is outside of our expectations. But likewise, we expect obviously the net cash burn to decrease over the next few months and the next few quarters, just as we start increasing sales revenues. And perhaps as an additional element to consider here as well, we had marketing initiatives that needed to be some money spent on that Greg just alluded to. And there is also a delay in terms of cash collection. So even some of these sales that we've seen in March, we only expect to collect those in a couple months down the road in terms of cash coming into our bank account. So all that said, it seems a very, very large amount, quite obviously, but it's also obviously expected by us that we had to undertake this type of investment, and we're right on track on where we want to be. That leads me to the second question that came, and that was, is the cash sufficient to get us to cash flow break even? And we basically stated that very clearly during the roadshow back in December in connection with the last equity raise. And we don't see anything that would divert us from that view back then. So in other words, we believe by the end of 24, somewhere in the last couple of months, we actually make the turn and get to cash flow break even. And we certainly expect that today still.
Peter, I'll give you a breather there for a second, if that's good. There's a question, I think this is an important one, of how do, I think we both can probably chime in on this one. How do you take, with the cadence of the reps and then the first quarter performance, how do we kind of reconcile that a little bit, right? How do we think about that for the, how much is that, a predictor of what can happen, down the road? And I think, from my perspective, I think Hans-Peter, feel free to chime in here. We can yin and yang this a little bit. It's a really important one, right? That's why I think for us, we spend a lot of time making sure, like I said, job one here, a must do was getting that sales team recruited, hired, and trained. Absolutely must do. All the work that the marketing teams, are doing, the work we'll do on the payer side, that's not going to matter unless we get that team up and running, hired, trained, and out there actually calling on physicians and organization for Shield. We absolutely pivoted, and that was the big focus, right? It's like it had to be done, and we got it done. And not only do we get it done, we've got a great team. I couldn't be more pleased with the level of experience I've seen. Obviously, we got to turn around now and have that execution focus, but that was a massive, massive undertaking with the organization to be able to come out of that where we are as well. The other nice thing is, if you think about where we were in the fourth quarter, the number of reps, how many reps we had coming into the first quarter, the timing of training, I think that 12% really stands out. Not just the March number overall, but really the overall first quarter stands out that we had a significant amount of disruption in the first quarter. We continued to grow, we continued to execute, and I think that bodes very, very well. So this is not by any stretch of the imagination, I'm going to take what you did in Q1, multiply it by 3 roughly overall to try to get an idea. We're just getting going on this whole thing, as hopefully you've heard throughout this presentation. But Hans-Peter, maybe another comment here to think through that.
Yeah, I think that's important to recognize. Even so, the growth rate stated from quarter over quarter was 12%. Really, there's another story behind that tagline. And the story is as follows. In Q4 22, we had an average 22 reps in the field. They generated, as we reported, about 9,400 prescriptions, which makes an average prescription volume in the quarter per rep of 425. If you look into Q1, you almost need to kind of separate the sales force in two, because we took on 16 reps that had previous experience and were with us as part of the contracted sales force. So those 16 basically already knew the product, they knew the territories. And then we had 14 newly trained reps, newly hired reps, essentially join the team effective February 1st. And they obviously need time to kind of ramp up their knowledge, get to know the product, the territories. As Greg, I believe, alluded to, in average in the industry, it takes 3 to 5 months until a rep really gets up to speed and can expect to produce fully. So if you look at those two elements, we actually looked at how many prescriptions were generated in Q1 from the 16 reps that had the previous experience. And of the 10,500 total prescriptions, it was about 8,500. And that would average to roughly, I've written it down, 530 prescriptions. So if you look at the 530 average in Q1 23 and compare that to the 425 in Q4 22, that is an increase of nearly 25%. It's quite substantial and quite a different story than the 12% tagline really tell you. And for me, that is really the underlying story of what the product potential is going forward, and particularly in the near term in 2023. If you then extrapolate that over to 100 reps that we expect to have in the field sometime in May, there is huge potential here. And we believe that the numbers that we have come out with the year prescription volume expectation of anywhere from 125,000 to 160,000 is still very much within our sweet spot.
Yeah, I think that's a great way to look at it overall. And without any disrespect to our colleagues here, those 14 newly hired reps as well, I think your 8,500 target you put in there is probably low, right? I think, we probably drove most of those prescriptions. Again, they're coming up and running, they're definitely contributing, but I think that coloring context from Hans-Peter there gives us really confidence of what that now 98, soon to be 100 sales reps will look like once they're out there, up and running, full marketing campaign behind it. So you can feel like, the level of excitement I think both organizations have, which is great. There's a question on Norgine, just kind of key focus areas as well. And look, Norgine, I think, to be frank, we're disappointed with the performance thus far that we've seen. There's been a number of different, conversations and focus areas. I'm particularly focused on areas where we have kind of commercial organizations on the ground through Norgine, particularly Germany and the UK, where we have, good sized markets, good opportunities there, and the ability to have pricing and reimbursement established as well. We've kind of talked about the need for the potential to call on the market where it looks like there's the greatest opportunity, which is women's health. I will say Germany is a little bit ahead of where the UK, is right now, and that's a continued area of focus for us as well. But we're not satisfied. We're not thrilled with it, and they're not either, right? So we need to work to figure out how to get them up and running, in a way that we think reflects the full value of that product across the board, and that full value of the product clearly in a lot of those markets, potentially is in that women's health segment across the board there. I will say, organizationally, obviously they have undergone a lot of changes. They had some ownership changes across the board last year as well. There's been a decent amount of turnover, different people there. All that, doesn't really look, that's not my challenge, if you will. Our challenge has been a little bit of different on the personnel side, but at the end of the day, that's great for them, but I care about our product and getting the most value out of that product. And that's really, my goal there is to make sure we maximize that value. And I think that's their goal as well, but we just need to move a little bit faster, smarter, more efficiently to kind of get that thing up and running here for sure. Hans-Peter, any other financial questions you need to hit?
Actually, there's one more here that might be interesting. And again, similar to before, maybe we can both chime in a little bit on that one. But there were some questions about the average net sales price of $135 in 2022 that we disclosed, and a number of questions on how we expect to increase that potentially and how that's comprised of. But, important to recognize, again, that's an average net sales price. And this average net sales price is really dependent on a number of factors. But there's two key elements here that I'd like to introduce just to make sure people properly value that number, that amount. Number one, we're still fairly early into the launch, not even 2 years since the launch. So it is very important for us that both for writers and patients, it's very easy to get access to the product, which means we continue to make the product available for people that do not have insurance coverage that's currently carrying Acrifer, our product. And that's just to create awareness, number one, but also making sure that writers, physicians, have it as easy as possible to prescribe the product, which is important to create the awareness. We don't want the broader physicians to have to look up first, does this patient have coverage, yes or no, and then basically lose a lot of time. That is detrimental to a launch when you're trying to create that awareness. So we are still subsidizing a pretty significant portion of the prescriptions that go out the door, which obviously has an impact on the net average sales price. Eventually that will change. The second element, and we alluded that in the market access piece with the slide that showed that we have 100 million covered patients. Obviously, there is room to improve here, and we're working very closely with our new partner, Viatris, on that. They have a very experienced large market access team, and there's two elements that we can do to improve the insurance coverage as it stands right now. For one, we can revisit the contracts with our current payer partners, and see if we can potentially better the pricing arrangement. And that's one element. That takes time, and we're certainly looking to do that in certain instances. And the other element is to see if we can get additional insurance companies onto the list of covered payers. And that's another important one that we look to improve. That does take time. Right now, obviously, they're focused on getting the commercial sales operations up and running, get the team recruited, trained, and in the field. I would expect that more toward the second half of this year, we're trying to make some push there. The success of that is greatly dependent, obviously, on the other side, on the negotiation table, on how they're going to react and how receptive they're going to be to potentially help us out here.
Yeah, I would add, Hans-Peter, that that's the push-pull in essence as well, right? The push here becomes driving volume of prescriptions, right? That gets people's attention more than anything else, which then makes it much more manageable on the pull side to negotiate the right level of rebate agreement to manage the business, but also open up access. So these things go hand in hand, right? As we've talked to the Viatris team, it's like, look, job one, you got to get that sales force out there, trained, out there, driving volume, driving awareness. The physicians, when they demand the product and that demand starts to build, it absolutely helps from the payer perspective. So you outlined that extremely well, but to go back that kind of push-pull, who's involved in doing what, it's a highly integrated, kind of approach here that we need to think through. And we got the right team and the right expertise in place to manage that as well. Good. We're running up against time here. I've got one last question here that just popped in around just how the two organizations kind of working together. I think, as noted earlier, and probably a good way to conclude on this. Look, we were working together as we negotiated this agreement with our partner Viatris towards the end of last year. Upon announcing an agreement, there's been a lot of work that's had to be done across both organizations, right? Recruiting, hiring, training, planning for a national meeting, engagement on the payer side, brand new marketing campaign that's getting launched out there, preparation for ACOG. It's really, we're 4 months in, and the amount of work that has been accomplished here, certainly for us on our side, but for them on their side, is just outstanding. And the level of consistency, communication, collaboration. Somebody was just down at one of the recent training classes, and you can't tell a Shield rep from a Viatris rep. Everything we are doing is together to promote that level of collaboration and communication, and importantly, sharing of experiences. We can accelerate the entirety of the two organizations up to get to that 3 to 5 month productivity as fast as humanly possible. That's part of why we're doing a national meeting together as well. You don't see that too often with these types of agreements, where both companies come together in one national meeting and go out and execute that. So it's been excellent. We're excited. The heavy lift is kind of, I don't want to say behind us, but one of the big lifts is behind us. We are now very much shifting to execution, right? Good field coaching, support for our reps, getting them up to speed as fast as possible, launching the new campaign. So all that execution takes place now. And we're very, very pleased with where we are to date. Now we execute, and now we look forward to where we can kind of get this product to. And this is the way we always thought we should launch this product. So I'm actually excited to be at this, kind of point in time with all those resources coming behind us. So thank you again for all of your time, your interest, your attention. Apologize we couldn't get to a number of the different questions there, but we appreciate everybody's interest, and we look forward to keeping you up to date on our progress throughout the year.
Greg, Hans-Peter, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure be greatly valued by the company. On behalf of the management team of Shield Therapeutics PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.